Hey everybody, so I got a good one for you today, and we're just going to jump straight into the technicals. So starting with VXN, this is NASDAQ volatility. I'm going to go on the 1 year time frame. And as I pointed out yesterday, we were in this falling wedge, as you can see right here, and we just broke out of that today. So we're going to see if this holds. And right now we could run into resistance right here on the 50-day moving average, which is 33.26. So, if this does make it back above there and it does close above there, the market is going to get a lot more risky. And with CPI coming in tomorrow, you know, I definitely do think that there is a good chance that this could break above. Definitely if CPI comes in horrible. So one thing to note, there is also this downward support line. So let's say CPI comes in great. Well, then I do think we could fall down to that. So that is the risk if you're a bear. Now, if you're a bull, the risk is obviously if this breaks back above the 50-day and back above this trend line. So now looking at VIX, pretty similar story here, We have this falling wedge. We have this breakout right here. But look, we also have this support line that we actually bounced off of. Now the support line under this, if this is a false breakout, is going to be right here. Now that's going to be the bullish scenario if VIX falls all the way down to here. And the bearish scenario is kind of already playing out right now. We got to bounce right off this trend line. So if you watched my video yesterday, I was talking about the possibility of VIX bouncing off right here. And it just did happen to bounce off right here. But look right here also, we're kind of wedged in between this trend line and the 50-day moving average. So, obviously if the news is bearish tomorrow, we're probably going to break over this 50-day moving average right here at 2640. And this could possibly be synonymous with SPY falling under 400. Now here RVX, which is Russell volatility, we ever so slightly broke out of this falling wedge. So here with the Russell volatility, the one thing I do want to note is that there is this massive swing that is actually just moving sideways between this wedge right here, as you can see. And we just broke out of a smaller wedge right here. So with the Russell, we'll see where things go. But I generally think that the Russell holds some of the riskiest things in this inflationary interest rate environment. Now here on Apple, things are getting pretty ugly. So the other day I was talking about how important this support line is right here, right around 140, right around 145-ish. And you can see that we actually closed underneath that. So things do get ugly here. And where we happen to close is right here on the body of this doji. So I think we're just kind of waiting for confirmation. If things do get bearish, I think this just becomes a complete inverted cup. And I do think that there is a high probability that if we do fall, we could bounce off right here, right around 137.91-ish, or basically 138. So the reason why I say that is because if I zoom out here, this is support right here and right here. The top of this resistance trend line also meets up with this area right here, right around this date. So if tomorrow, things don't look good, I think we just go straight down to this level right around here at 138. So that's it for Apple. And, this death cross did happen a few days ago. So I think it was kind of foreshadowing a fall in Apple. Now here on SPY, SPY really fell off a cliff. And it's essentially at the bottom of our weekly risk range, which was right around, let's see, 460. So we're basically right around there. And the other day I did have this trend line drawn. And I'll show you the significance of this trend line right here. So I'm going to have to go on a lower time frame for you to really see this. So let's just zoom out a little bit. I'm going to have to go on the 1 month. So as you can see, This was support right here. It actually passed through this gap up. It was also this little support area right here. Support right there, support right there. And where did we fall to? Smack dab on this line. I mean, can't make that up. So the next support is probably going to be right here around 400. Now, what happens if we break under that? Well, I do think things get really risky because when you look at this is basically an inverted cup. And it could just completely fall down all the way back here to these lows right here. So now let me just zoom out. Now, I mean, as you can see, under this area right here at 400, there's not a whole lot of support. You know, support really just comes right around here, right around 392. So it is very possible that, you know, if the news looks bearish tomorrow, we're going to fall another 2 point something percent, maybe this exact amount, like maybe 2.4-ish percent. Very possible. And you can clearly see, you know, we had this little wedge that we were drawing out. Clear breakdown of that wedge. But, you know, we're also on this bottom support line. So, I mean, what's going to happen? I mean, it's very clear if news is bad. It's very clear what's going to happen. I do think, you know, it's just going to go straight down. But we'll see. And if I do look at this, you can clearly see that this is a bear flag right here. So here is the pole. Here's the flag. And then we could just make that other leg lower and then maybe draw out another flag. So the one thing I would pay attention to is this support line right here. Now, if we do make a lower low, you know, expect that to be around 375 possibly. And let's kind of see what kind of support we have here. So yeah, it could go as low as maybe 373 right here. So that's if we make another leg lower and if we do follow this trend line right here. So let's just go over to this 373 area and see kind of what we're hitting. So as you can see, we're hitting this right here. We are catching this little gap area and we're catching that support right there. So I do think that would be a likely area for a bounce if we do make another leg lower. So if we do make this other leg lower, you know, we could bounce, maybe we could draw out another flag. Now with the Qs, I mean, the Qs look pretty ugly right now. So right here, you could clearly see that price action is rolling over. And you can see that there's like this little gap area right here that we filled and we actually fell underneath it as well. So, you know, if things really, really, really do get ugly with CPI, I think we could come all the way down to this gap area. And I know that sounds crazy, but, you know, that's going to be like another 2% move. Or like that's going to be like a, let's see, that's going to be like a almost 3% move to the downside. So it'll be like something between like 2.5 and 3% if we do close this gap area right here. So what I'm pointing to is this right here. And then there's even another gap area right here that we could even fall down to. So things could get really ugly on the Qs. I mean, we could really just fall off a cliff right here. So definitely pretty dangerous if the news is bearish. Now with Amazon, I mean, Amazon was pretty crazy. When I'm looking at the weekly risk ranges, for Amazon, I had 129.64 as the high and 115 as the low. So if I'm just looking at a lower time frame here, so let's just look at how high we got on Amazon here. So if we look at the high on Amazon, it was right around 129 and the upper risk range was 129.64. Now where we're at right now is 116.15 and our lower range is 115. So we're pretty darn close. Now, you know, with these weekly risk ranges, I do want to say that when we have macro event news like tomorrow's CPI, it might not be as reliable because we could break out of those deviations, and we could easily break underneath the weekly risk range if the news is very bearish. So where do I think Amazon could go from here? Well, I think the next obvious area would be right around here at 108.76-ish. Now, if I zoom out, I'm going to show you why. It could just be this little area right here that we find support on. But I do think a more reliable area that we could fall to is probably right here around 101.63. So that's going to essentially annihilate this entire move right here, as you can see. And it's also going to be this resistance right here. Now with the Microsoft, you can kind of see that price action is also rolling over. And where I think that this could fall if things get bad is we have this support line right here. We also have this prior resistance line. So I think where these two lines meet, if we break underneath this support area right around 261.31, is probably this intersection right here, right around 256. So I do think that that could be a highly likely area. And that is kind of right around this area right here. So if we could fall even more, I do think it would be possibly this gap area right here, right around 253-ish. So there was this old gap here. It was 253.32, and the top of this was around 258. So I do think we could hang around that range, quite possibly. So if we do break underneath this intersection, I do think things definitely get pretty ugly. And, we could fill that old gap right there. And then maybe we could even try and do like a triple bottom-ish kind of thing here. So definitely something to pay attention to. Now, let me actually see something right here. We could be drawing out a bear flag, which I think we are. Yeah, so if I'm looking at this, I mean, this could just be a bear flag and we could make another leg down. So let's just see what another leg down would look like. So yeah, I'm thinking another leg down would probably be like this 236 area. So things could get pretty ugly if we get all the way down there. So as you can see, support, support, resistance, 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 gap. Now, let's look at Google. So when I look at Google, very clear trend channel right here. Kind of hit the top of that, and as you can see, the body of this candle is kind of stuck right on the top of that. So where can Google go if we start fading? Well, I think it could fade all the way down to here, which is 2,193. And then, if things really get ugly, I think we could probably try and do a double bottom, which would line up with the bottom of this trend line right here. Or we could even crack down a little bit lower and make a lower low, right around 2021-ish. So as you can see, that is the top of this gap zone. And lastly, Tesla. So with Tesla, I'm looking at this pattern, and to me, it looks like a bear flag as of right now. And of course that could change, but let's just look on a lower time frame. So on a lower time frame, we are kind of falling down in this falling wedge. But remember, falling wedges aren't always bullish. It could actually just be drawing out a bear flag, and then it can make another leg down. But ultimately, this 700 mark is going to be very important. If at any time we do close underneath 700, be very careful, because that's when I think all the puts are going to pile in. So 700 is this area right here, which lines up with this massive, massive, massive move we had back in February. Now, of course, the bullish scenario is inverse head and shoulders, which could be this right here, that, and then this, and then maybe a rip to the upside. So that's the bullish scenario on Tesla. But, you know, if the entire market is going to fall on bad CPI tomorrow, which is very likely, I don't think that's going to be the situation on Tesla. So I hope this video was helpful to you guys. And definitely stay careful tomorrow. CPI is going to come out before market open, so we'll know right away if it's good or if it's bad. So stay safe, you guys, and have a good one.